Okay guys, welcome back to another video. I know you guys probably haven't seen my face in a while. We've been doing a lot of on the computer work. And why have we been doing that? Because it's easier just to show you guys than to talk you guys through some of the stuff. But in today's video, I kind of want to go over why I think credit spreads or selling options is the best option for 99% of people out there. So with that being said, let's go on ahead, cue the intro and get into this video.
Getting dirty money.
Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. Okay guys, so you're gonna see behind me, I have 4 charts up here, obviously all on this one screen. Ignore the big screen TV, that is going to be mounted up there. Most of you guys know I have moved recently and I just have not gotten everything set up. Everything's been going on. But obviously your main ThinkorSwim is over here. If you guys have not gotten ThinkorSwim, go on ahead and get it. Set up an account with them. It's free. You can deposit $1, do whatever. I've seen people put in like 50 cents to $1 and have a free account basically forever. And you get to use their great tools. And I love ThinkorSwim. I have it on my phone, iPad, everything that we have, so definitely use it. Now, credit spreads. Why 99% of people should be doing these rather than actually trading or day trading stocks, day trading options, futures, anything like that. Why? Well, because 99% of people out there do not have a strategy that works like just an outrageous amount consistently. So I've been very lucky. I've done very well day trading and swing trading and things like that. So I do think that you can be profitable swing trading. Now I'm just going to show you how to set your odds in your favor. Now, in ThinkorSwim, if you go to the options chain on here, you're going to see, and how do you get to this, is pretty much if you go to your trade tab, it's going to look like this and it's going to give you a bunch of numbers. You select your date, and then you can filter and do different things. Now, that's not what this video is about. I already have a video that shows that, and I'll make another one if I need to. Now, what you're going to be looking for is probability of out of the money and why people should be doing this. Well, the realistic ability of this is most options actually expire useless. And who makes that money? Usually just banks that are selling those options to people, giving them the option, and they just keep collecting that capital and people keep buying them. And I know a lot of day traders, and I've worked with some of them, that like to flip options on the daily. And I used to be one of those that would do options every single day. Now I don't do that anymore. The more you learn, the more you grow and the better you get, which is great in life. So I'm just going to basically help you with all the experiences that I've had. And I don't flip options anymore unless it's some big day or we're having dramatic moves. If you can see dramatic moves, then you're able to flip options very, very quickly. But on a day that's very, very slow, and all of a sudden your option's getting beat by theta. So what you're going to do is you are going to simply sell options that are way, way out of the money. ThinkorSwim actually has the ability to show you in your option is, what is the probability of being out of the money? Now, statistics, I can't speak, statistics say that I think it's like 30 days to be exact. I don't remember the exact amount of days, but it's basically 1 month out will give you the most theta, basically depreciation of that option, meaning that an option is going to depreciate the most in those last 30 days that it's there. So what can you do to make money off of that? Well, I think it's pretty easy. Is you're going to sell options about a month to a month and a week out. And again, if you have a different opinion, that's 100% okay. I have found great success from just doing this on my own, and I'm beating the market every single month or every single year doing this. So it's not a big deal to me. But you're selling those options, letting them go useless, and me, I like to be 85 to 90% out of the money, and the probability will give you on ThinkorSwim, and you're able to use that and watch it come down. Now again, in the first couple of weeks, maybe, that option does go up in value, But as long as that option expires useless, basically it did not go in the money, you collect the full premium. So for instance, if you do a credit spread rather than just selling the whole option, you can sell the whole op because you don't have 100 shares of, for instance, SPY, Apple, Microsoft, or QQQ. Those are the 4 that I like to do this on. If you don't have 100 shares of those, not a lot of people do, but if you don't have 100 shares of those, all you have to do is sell an option, and then at the same time buy an option that's just a little bit cheaper, and you make the spread in between those. So if you sell an option for basically $1, which equals out to $100, and you buy an option for 90 cents, which is equivalent to $90 on the option chain, if you look at them, well, you make that $10 difference. And as long as it expires worthless, you keep that whole $10 for doing nothing. And I think the credibility or the max amount of money that they're going to basically keep just in case it does go against you is usually like $150 to $200. So you're making $10 off of $200. And instead of looking at it as, I'm putting that in as an investment, and yes, I do think that's a great idea. Still look at it as an investment. But the other thing you should be looking at it as that's like collecting a dividend every single month. That's $10 off of, what is that, $200? And if it goes worthless before, you can buy it back for a couple cents. For instance, if you do that exact same thing and it becomes useless way faster than what you thought, maybe you're a week in and it's already pretty much just absolutely useless. Well, then you're not getting hit by the PDT rule, also known as the pattern day trade rule. You can go in, buy it back, say for 5 cents, you make your $5 off of that, and then roll, or not even roll, just start a whole new position, maybe 2 more weeks out, or basically a month out from that exact date. And now maybe you're gonna be able to do that twice within that month. Maybe you're gonna get to it 4 times within the month. Depends on if the market's going with you or against you. Now, again, this is how you can make money by being even wrong on the stock market. So if you think the stock market's gonna continually go up, that's okay. You can still sell a call that's way up here, and as long as it doesn't hit way up here, that's just just a ridiculous amount of money that you don't think that the market's gonna hit. And it kind of stalls, but it went up, but it never reached up here. You still make that money, and that's what's great. That's what banks are doing. That's what other investors are doing. So what Warren Buffett's doing. It's also known as a covered call if you own the shares. So with that being said, thank you guys all for watching this video. I really hope to help somebody else out. And if you need anything at all, please leave a comment. I answer all my comments, and I will see you guys in the next one.